Today, I'm going to look at Nvidia as a stock price and from a technical analysis standpoint, nothing else. In this video, I'm going to break down what I see, where Nvidia has come from, where it's headed, and where we possibly should take some profits or add to the position. Start with a monthly chart of Nvidia. And what I want you to see here is this exponential growth since the May of 2023. Nvidia gained momentum starting back, let's just say here around August of 20, which was during the pandemic. Free money started coming into the system. You had a rise up into December of 21, pull back into the bottom in October of 22, and then a move up, and then a breakout in May of 23. And this is when this rally started going, and Nvidia became the focus. And in that period of time from May of 23 to today, January of 25, we've seen a 450.8% increase in the stock price. Now, that's gigantic. I know Nvidia is like the hub of GPU processing, data centers, and all this. I totally get that. And I have no doubt they will continue to innovate and grow. But this massive 450.80% rate of return from May of 23 to this month, at some point this is going to retrace at least some of it. And so when I look at this, I look at it from a monthly standpoint. I've seen in November of 24, it hit a ceiling with a high of $152.89. It went back and challenged it this month at $153.13, and on Friday closed down to where it is today at $137.71 for the month so far. Okay, so I'm looking at this and I'm going, how much more capital spending, how much more affordable money is available for Nvidia to continue to go higher? Now, this is not about Nvidia as a company and the products and services they provide. This is about the stock price. These are two different things. And as you all know, the stock market is driven by headline news and what's in favor. And so when I look at this, I go, okay, 450.8% return. God bless you if you got in, in May of 23. Awesome. Hell, even if you were one of the gamers of the world who saw what Nvidia was doing and got in, say, in August of 2020, geez, I mean, it closed out at $13.37 for that month. Look at where you're at today. That's phenomenal. But all things eventually retrace. I mean, even if you look at here from, let's say, August of 2020, where is it there? Somewhere in here. You had this move in August of 2020 from here. Let's take a look at that and what that looks like. August, here we go. So from August to 2020 to right here, that's 150% move in the stock from August of 2020 to November of 21, and then it started to retrace. It retraced back down to where it bottomed to $11.71. So we went from a price tag of August of 2020, we had a closing price of $13.37. It moved all the way up to $32.68, and then it retraced back down to $13.15. Basically, it came right back to this rise over a basically 1 year, 1.5 year, one and a handful of months period. Now this run it's been on since May of 23 up until now is a year and almost 2 years, or closing in just under 2 years. Okay. So are we running out of steam? Remember, here we had low interest rates. We had easy money. Banks were doling out money, and so we're doling out this money at cheap rates. Today, the Fed has raised rates, and to borrow money is much more expensive. We're seeing that residential and housing market. We're also seeing that in corporate loans and corporate commercial real estate and so on. So my question is, you got a 450% return here. Wouldn't it just be healthy for it to retrace, 50% of it? So maybe back down to, $90. I mean, there's 2 months there of and then a breakout here. Or even if it came back down to $124.32. Seems logical to me. Okay, let's look at a weekly chart. Okay, now this is a weekly chart, and look at how we had this August breakout back in this area, moved up, we hit a resistance level, it pulled back a bit, and then it broke out again and has moved up ever since. So the question is this when I look at this, I say, okay, here's your levels in the short term. So since May of 24, which isn't not too long ago, moved up, hit resistance here, right in this area, right around 130, pulled back, tested it again here. This is a weekly chart, remember, and then moved up and it's hit resistance again, 2 times. So when I look at this, bang, bang, now we're moving back down. Is where we're at support right now, at 129.52 roughly, or are we going to see a pullback back here to the roughly $93 range? And when I look at this, I go, okay, what factors are in play? What variables are in play right now that could stop this move, this 62% move since, since May of 24? I mean, wouldn't it be reasonable to see a 50% retracement? So that would bring it back into the 120 range. Or is the variables of what is happening economically in the United States, are we most likely to see a retracement back to its starting point back in May of 24? I don't know the total answer, but what I'm seeing is more and more that as we come into earnings, which is on February 26th, which is a long way, there's a lot going on, especially this first 18 days in the year, that could warrant this stock to pull back even further. So where is support in this area? Well, we got maybe support right around 125. Now, if you follow the price range projection worksheet that I put out, I send out a free version for Nvidia every day. It demonstrates the price ranges projected for the day. And recently what we're seeing is, or what I'm seeing there, is a range between like 124 on the low end and 127 on the low end. The high end has been going from 137 to 143. So when we see a move down, lower lows and lower highs on a daily basis in the price range projections that we provide on the Platinum channel for all the Mag 7 and the indexes and Bitcoin, and we're going to be adding more crypto to it as well, what I'm seeing is there is more resistance in this 140 to 143 range right now. This is becoming resistance. And the lower end is down right around that 125 or so range, say 124. In just saying that right now, I was sitting here looking at this going, okay, 124 right there. Boom. There we go. Look at that. There's support there. This, at one point it was a bust through, broke down, hit support down here at 93 or so, moved up, tried to get through it, broke down, went back and retraced, and then went back up, and boom, went back up. Now we have had a handful of times where it has come really darn close to this right here 124 range. So are we range bound? Is this going to bounce back and forth, back and forth, back and forth? If so, well, that's pretty cool. If you ask me. Now, this is the weekly chart that you're looking at, because if this 124 becomes support, and your resistance level up here is 152 on the high end, let's just say 150 range, then you got an opportunity to trade the range of Nvidia. And this could go on for a while up until earnings, most likely, possibly. So this is encouraging. If you're a short-term to intermediate trader, you can see the pivots, buy the pivot, sell the pivot, buy the pivot, sell the pivot. Now we get into earnings, and this is where this could go really right or really wrong, in my opinion. And when I look at this, I'm like, what are the factors that would cause Nvidia to go higher? The additions to their offerings. So they're going back into gaming, they're going back into robotics, they're offering the personal super GPU computer for $3,000. I think that's not coming on to market until May, so you won't see really true results probably of that until fourth quarter, if not first quarter 26. But this other stuff they're doing, is there enough buying power in the market? Microsoft's their biggest purchaser. Basically, 5 companies right now represent 50% of their revenue. Is there enough pent-up demand that these 5 or 6 companies, just say 5 companies, have enough buying power to drive Nvidia's revenue higher, increasing their profit margins or earnings per share? I don't necessarily believe so, because this 450% move that we've seen since 23, that's gigantic. And I think there is so much massive spending that has been pumped into this system, the AI environment, to a very narrow group of companies. Whereas if you look back at the dot-com boom that ran basically from 93 to 2000, you had thousands of companies participating in it. It was a low cost to entry environment with the internet and dot-com boom. Whereas AI, it's costly. Last I saw, Microsoft is dropping $90 billion on data centers and all that. Those projects. They're going and trying to reactivate 3 Mile Island so they can get energy. These are things that are headwinds. It doesn't say anything about Nvidia as a company, as in what they do in products and services. What this tells me is that the momentum I'm seeing in Nvidia, as well as all the Mag 7, is it's running out of steam. It's running out of energy. And so what I want to see is, does 124 on Nvidia become support over this up until earnings, and we get to play the ping pong game of from here, a pivot from 124 back up to 150, and back down, and so on and forth. If so, that's awesome in my opinion, because I can make money doing that. Or is Nvidia just dead in the water and going sideways up until earnings? And then after that, what happens to Nvidia if earnings are great? What happens to Nvidia if earnings are bad? If it's bad, easily, in my opinion, $93 is a major support level. That's where it's headed if it's bad earnings. If it's good earnings, I don't know how much good earnings it will take for it to go through 150. In the environment we're in, the economic environment we're in, I think it takes a whole lot. You have to see an economic, and it's everything, credit card delinquencies are at all-time highs. People are strapped for money. There is just a lot of people drowning right now. And when I look at this, I go, hey, maybe this is running out of steam. And if you have enormous profits in Nvidia and you wrote it up to 450%, maybe there's opportunity to take profits, put some dry powder aside. I mean, heck, you can buy a 2-year treasury right now and get paid, was it 4.23%? And the risk level is super low in comparison to the risk level of Nvidia at this point. Take that money, you stay liquid, You wait for a pullback, you wait for earnings to come in, or you play the ping pong, game between 124 and 150 or so, and make money that way. But you keep your risk low. I think it's very important to look at these charts and look at them from a weekly to a monthly standpoint, and look at what has been achieved. It's really important to understand the environment you're in. Playing the hope game, playing that this will never end, let me introduce you to 3 friends of mine who went from as high as 150 million in net worth to bankruptcy in a matter of 4 years, playing that hope game with the housing market. We've seen this with the dot-com boom, where everybody was a millionaire, evaluations didn't mean anything, and then everything went bust, basically for 12 years. When I look at Nvidia, I see an awesome company. I see innovation, I see quick turnaround, I see new products and new services and new markets in their future. When I look at the stock price, I go, it's time to take profits and preserve capital, or play the short intermediate term game, use the price range projections on a daily basis, and play and minimize my downside risk by using this strategy and playing the day game, the short 15-day to 62-day time frame, and play this channel until it breaks down. Now, if you're a short seller, if you see a breakdown from 124, there's a good chance it's headed to 93. There's an opportunity there as well. So when I look at this chart, I anticipate that we'll see some ping pong movement from 124 to 150 between now and earnings. If earnings are good, I don't know what'll take it higher. I actually, taking a contrarian standpoint on it, I would expect if earnings were good that it actually does sell off and pull back to 93, because people buy on the rumors, sell on the news. Everybody's anticipating earnings for Nvidia are going to be fantastic, but oftentimes they do come out fantastic and the market turns on them, because the big institutions, they sell into this ping pong game between 124 and 150, and then they turn around to you, the retail investor, you and I, and when they get the good news, they turn around and push the short, push it downward and short it through 124 back down to 93. Either way, be prepared. We're in a very vital place with Nvidia. You got to play this game really tight to the chest right now. So if you're trading it from a short and intermediate term, I think you got enough volatility in Nvidia to make money. If you're looking at it from long term, check how much profits if you have. If you have 450% profits because you bought in August of I believe May of 24, I mean, hell yeah. I mean, you got to book some profits there. I mean, it's just a thing. Actually, it's May of 23. If you have owned this since May of 23 and you have booked these gigantic profits, now may be the time to take some off the table, go to dinner with some friends, celebrate, and put a lot of dry powder in this, in the back pocket. So when you do get a result from earnings and we get a trend change or trend confirmation, you can come back in, buy on the low end, and profit again. So that's my take on Nvidia. I believe these markets will change every day, especially the new president coming into office on Monday, what is today, 19th, 20th. You got a lot going on next week. This should be exciting. Whatever you do, preserve your wealth, protect yourself, and always, always live loud.